Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. But before we get into that, stocks are trading lower in this holiday shortened week as U.S. markets will be closed on Thursday for Thanksgiving. As a reminder, we also close at 2 p.m. Eastern for stocks on Friday and 1 p.m. for stocks, 2 p.m. for bonds on Friday. And Chris, I think it's a mixture of it kind of quieting down a bit on the desks. The World Cup is on right now, so I think traders' attentions might be elsewhere.
We did open a little bit lower this morning, but not as much as everyone thought. And we sold off kind of around 10:30 to those lows. The index opened at 11,623 today. We've been trading a little bit below that range right now. I really think kind of comments from San Francisco Fed, Daly kind of warned about too much tightening in the market, kind of gave like a midday rally, basically saying that looking at unnecessarily painful for the economy here if we tighten too quickly. And if you look at the overall market, right, if you follow, I've been following this on the desk, you look at unemployment, and that's kind of one of the two main key items here that the Fed keeps looking at. And you've had over 500 tech companies so far in the last quarter either lay off, freeze hiring to the tune of over 200,000 jobs so far. Now, if that's where we want to go, then yes, Daly's comments are unnecessarily painful. But the question is, what are you going to do to battle inflation? And that's kind of what the markets keep reading into. The unemployment situation is dreadful. Not dreadful enough, though, right? And that's kind of where the economy is heading. So when you look at like the holiday spend coming up, Black Friday's coming up on Friday, the NRF is looking for holiday spend to be about 7% year-over-year growth to about $950 billion, the most ever. Last year we saw 13% growth to about 890. So you're looking at spend there, but where are people going to be spending if they're getting laid off? They're going to be using their credit cards and their savings. So that doesn't really bode well for Q1, Q2 lineup here. And the market's kind of waffling back and forth, though we are holding on to some of those post-CPI number gains. It's just not as strong as we were hoping for.
I mean, Chris, you think the unemployment reports are really that dreadful? I mean, I get wages not being in line, but
it's think about where it is, right? Mm-hmm. The unemployment numbers have been relatively consistent, right? You look at new claims, they've been around 220,000 week over week, a little bit more, a little bit less. But when you look at the tech sector and the headlines that are coming out of it, the people are being laid off there. Are they getting picked up or are they just waiting it out? If you were at Twitter, you got a nice payout with the stock being taken out at a higher premium than where it was deserved to be with this current situation, right? You're looking at people from a number of different companies, Amazon, Tesla, everyone across the board on the tech side is laying folks off. Meta's another good example. So where are they going to pick up and go? And if jobs are out there, are they the right jobs? So that's the big question with the non-farm payroll report. Have the jobs been in the right sectors for these people to pick up unemployment, or are they going to go into a temporary job once the unemployment benefits roll off? You look at the U6 number, and that's kind of where we're at. You're seeing people roll off a little bit more. Wages have increased a little bit, though last month they did decline a little bit more than people expected, which was nice to see. The unemployment rate at 3.7%, does the Fed really want to stay beat at 4.1% unemployment? I mean, if this trend keeps continuing, you're looking at a potential of a 4 to 4.2% unemployment number, and that's too much. Yeah. 3.4 to 3.5 is where you want to be. And inflation, it comes down to inflation. Is inflation supply-driven or is it demand-driven? And you can make the case that's been supply-driven because of COVID, because of the China shutdowns, zero COVID in China, and the reopening. So it's tough, plus government stimulus on top of that. The government keeps spending, writing checks. Is that a problem for the markets?
Right. Well, you know what? There are a ton of openings for skilled trades, and those are nice six-figure jobs once you get some experience behind it. And but that's a different conversation for another time. Let's our employment and skilled skill sets is a different conversation. But let's take a look at your first chart here. Let's get some fresh technical levels to watch on the Nasdaq 100. Right.
So the index, like I said before, held the CPI gains and it's really range bound. You're sitting between the 50-day moving average of 11,360 and the 23.6 Fibonacci of 11,930. A break above or below either one of these levels is going to be significant for the index. We're still up 7% since the October lows, even though we're down 29% year to date. Support is tight at 11,493, then the 50-day moving average, 11,360, give or take. Resistance right above at 11,600 and 11,700. So any move in between this in this range, whether up or down any given day, is good. A consolidation after the nice breakout, and we're waiting on the next numbers to come out. Again, CPI for December, non-farm payroll for December, and of course, daily Fed speak to keep us moving along.
That's for sure. And finally, Chris, let's take a look at the constituents adding to performance or
Right.
detracting.
Well, it's interesting, right? The split is 40-60 on the breadth, positive to negative. You've got a number of consumer names making new 52-week highs. Pepsi at the top of the rank, Monster Beverage, again, making a 52-week high. It's really a value versus growth type of proposition here. And then on the flip side of the losers, I mean, Lucid's made a new 52-week low today, getting beat up a little bit, as is Tesla. They kind of go hand in hand a little bit. And then the rest of the big boy tech names are down. Apple, Amazon, Alphabet, which detract almost 80 points off of the index. So wherever they go, the index is going right now. They're down anywhere from 0.5 to 1.5%.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks and happy Thanksgiving. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.